Stephen, this looks like RSA Group's best performance in a decade. Talk me through the highlights.
I think that we can say three things about the announcements we're making today. The first is we're reporting an excellent year, an excellent set of results. The second is that we're now putting together, I think, an increasingly impressive track record, 3 years of results building one upon the other. And the third thing I think we can say is the future is looking increasingly bright. I think that our best times can be ahead of us and the company is motoring well. So when we simply unpick the first of those in terms of the results, we're in an industry environment, which everyone knows, relatively flat growth, low interest rates, and most of our competitors, most insurance companies, are producing flattish results. In that environment, we have earnings per share up more than 40%. We have a dividend up more than 50%. We have operating earnings up 26%. These are impressive numbers at any time, I think particularly impressive in the context of a tough industry backdrop.
At the half year, you reported record underwriting profit, and that trajectory has continued into the full year, which I know was part of the plan. How did you do it?
Our results are built on many, many initiatives, but essentially pulling three levers. We are working incredibly hard to keep our customers happy and to make them happier, whether that be better service levels, whether that be new digital channels, and so on. We're then hopefully taking happier customers and underwriting better, making better risk decisions, more discipline, more sophistication, use of some of the things that technology will do for us. And that is all around the world, allowing us to have bigger gross margins to make better decisions. And then thirdly, we're reducing our costs. And these are the three ingredients really of success. We did exactly the same in the second half as we did in the first half. The trends are coming our way, and that's reflective of the hard work that everyone's up to.
We've talked before about attractive tailwinds from exchange rates, but these are challenging markets that you're operating in. Are these results sustainable? Can you keep up the pace?
One of the things that we're trying really hard to do is to create a sustainable company, a sustainable set of results, a culture, a machine, an organization that year after year after year can produce really good results for our shareholders and for our customers. And it's important to me. We do not want to be a flash in the pan. We do not want to be a company that has boom and bust. We have been that. We don't want to be that in the future. So everything we're doing, we're trying to make sure that we can do even better the next year. And one of the things that I am pleased about the 2016 results is, although our industry is one where you get good and bad luck all the time, you might have good storms or more crashes than normal or whatever it would be, the balance of luck is pretty neutral in 2016. In other words, these impressive improvements in profits and dividends and so on and so forth, they're real. They come from real things that are repeatable year after year after year. And I think that's how our shareholders would want it to be. It's how I want it to be, and it's one of the things we're pleased about.
That's inside your business, your sector, but there are external pressures too, aren't there? Brexit, Trump, low interest rates. What measures are in place at RSA to shield you from those?
I think that pretty much all companies operating in the business climate of today have to assume that they're not going to get free handouts. Of course, not free handouts from government. Normally it works the other way around. But the markets are going to produce challenges. Competition is going to produce challenges. Technological change is going to produce challenges for insurance companies. So is probably climate change. And so in order to navigate these challenging environments, first of all, you need a strong balance sheet. Secondly, you need a disciplined strategy that makes sure that you're focusing on things you're likely to be good at. Thirdly, you want, in the case of RSA, to be focused, but to have a balance of things you do. So if things go wrong in one area, there's lots of other areas to counterbalance them. We've got that. We've got an excellent balance across our businesses by geography and by type. And so by building up, if you like, these protections against the outside world through strategy, through the balance of your business, in a financial institution, through your balance sheet, You have solid foundations, resilient foundations. We have rebuilt those, and I think built them well. And on top of that, then you try to perform well, knowing that you have to do it through self-help, not because the outside world is going to give you a free ride.
Something that caught my eye was post-tax profits down year on year. What happened?
We have, first of all, as a financial institution, a complex set of accounting policies. And secondly, we've been restructuring and changing the business a lot. And that has given rise to some significant differences between what the accounts say and what's really going on in the business. And in this year, fantastic year, dividends up, profits up, and so on, as we've said. The accounting profit is down. Why is that? Because two big things we did which were fantastic for the company. We sold some businesses, in this case our Latin American and our Russian businesses, made a great capital gain but had an accounting charge. We got out of the risks of our legacy liabilities in the UK, big accounting charge but big gain for the company in capital, in earnings and risks. And so that's made our financials even noisier than they normally are. I think it's very, very clear that the noise comes from things that were good, and beneath the noise has things that are even better.
You set out some very clear financial targets to be achieved by 2018. You've completed the turnaround phase and are moving towards best in class. Mission accomplished, or is it time to upgrade those targets?
We want to be a company that combines delivery with ambition for the future. It's useless to have ambition without delivery, of course. So each year we try to set ourselves and communicate to everyone that we are ambitious. We want this company to be the best we can make it, and we think it can be the best or around the best in our industry. So we have set the ambition of being a best-in-class company. Will we reach it? I don't know, but we're going to try hard to reach it. And so every year it's our intention to build towards that ambition. The ambition speaks to our customers and how we serve them. It speaks to our shareholders and what we deliver for them. And it speaks to all of us as to how we work and the way we try to constantly improve what we do. And so inherent in that, as I said before, we believe the future can be even brighter than these record results that we've just produced. If we were to reach our goal of best-in-class company, there are 2 or 3 terrific years ahead of us, and then I think many, many more terrific years ahead of that. It's implicit in our targets. We've given some future ambitions in terms of what we call combined ratio. We're upgrading our return on equity targets with these results. We're upgrading the targets we have for how much cost we think we can save. But fundamentally, this isn't about targets. This is about trying to make our company the best it can be. And with 300 years of history, with the efforts that we're building on of people over those generations, we think it can be a terrific company.
So, nice news for shareholders with these results. You've raised money, you've cut costs, you've restructured the business. What next?
The next thing for RSA is exactly the same as the next thing was a year ago. Every single year we want to get better. Every single year we want to deliver. Every single year we want to come closer to being a best-in-class company. We want to do what we say and say what we do.
Stephen, thank you.
Thank you.